All right. Welcome to the Real and Real Estate Podcast, hosted by yours truly, Lindsay Prino, a realtor in Tampa Bay, Florida. This podcast was created to bring awareness of what real estate agents actually do and some other helpful insights in the industry for the average person. You can follow me on Facebook and Instagram at St. Pete Real Estate. All right. So today's topic, very excited about it. There's a lot to talk about. We're going to try to keep it as simple as possible, but it's about property and flood insurance. This is something that in Tampa Bay, it's being heavily talked about, especially in Shore Acres right now, in a piece of Northeast St. Pete, where we're seeing there was a lot of flooding from the last hurricane, Idalia. There's some fires, so everybody is talking about their policies. We've also seen in the last couple of years that a lot of Florida insurance companies have pulled out of the market, so we're going to get into some of the gritty details on that. But my whole goal for today is to give you some basics, right? Whether you own a property or own real estate in St. Pete, or you're just kind of tapping into that market, what property insurance is, why it's important, flood insurance. We're going to talk to a company that I use pretty frequently. They've been incredible, FSI. So we have Michael Puffer here.
How are you doing?
Good. Thank you so much for coming on.
Thank you for having me.
I've actually worked with his wife, Heather. She came to one of the events. We actually had Rachel Saylor Brown on a couple episodes prior. She's a lender. She holds this event called Women in Real Estate. And it was so awesome. Heather was there. We're going to have her on at some point. We'll do like a duo with you guys. Yeah. Give her the confidence to come out. But that's where I originally met her. And she was giving me some insight when I first started out in the real estate industry, just about how if somebody has a policy, flood insurance policy, they can actually transfer it to that new home that they're purchasing, right? Like the seller has the flood insurance policy, the new buyer, it can actually be transferred to them.
That's correct. I mean, at this point with flood rating risk 2.0, when the NFIP and FEMA kind of changed the guidelines, it's almost imperative that you transfer the flood policy. Okay. Because almost every single one of the policies that we've written technically has grandfathered rates. And if you don't assume the policy, that new purchase of a flood policy is going to be at a full risk rating.
Super expensive.
Very expensive. So there is a way, and there's a way for there to be a glide path. So that is just definitely one of the things that hopefully every agent should know. We found that they don't, but something that we do every single time.
I think I had come up to her and I said something about flood insurance, right? Like I'm trying to find out, as you're navigating the real estate industry, you're trying to find as many partners to work with as possible, right? That are reputable, that help spread knowledge, right? And not just are like, okay, we need this lender and they're going to, provide somebody with a mortgage, or we need this insurance company. Like I want to make a difference in the real estate industry. And Heather did that just by providing basic knowledge that no insurance company had told me prior that I worked with. And so that's knowledge for me, right? To go to my clients and say, hey, did you know that this was possible? And it saves them money on the back end. So she gave me knowledge right off the bat. I was like, yes, Heather, we're going to work together. Every single person on your team that I've worked with so far has been so efficient in getting quotes back. Incredible. And just like calling my clients and explaining to them what the policy is. Like you guys are relationship-based people and I love that. So
good.
But yeah,
love to hear that.
Give us some background about FSI, who you are maybe a little bit. We talked earlier just about your background, but yeah, give us an intro.
First, thanks for having me on.
Yeah.
We do have a lot to talk about. There's a lot that's going on. We are in the middle of hurricane season, and it has been very active up to this point. But my background, for the most part, while I've been in the business industry, has been in insurance. I've been with a partner with Florida Strategic Insurance since 2012. Two other partners, Chris Weaver and Dave Reno. And we've grown the business really by supporting real estate agents and lenders with new purchases of properties in Florida. Florida is an island when it comes to insurance and most other things. We just found a way to make sure that our clients that we work with are taken care of every single time. And it's amazing when you do that, your business grows. And then we've just continued to bring in great people, Heather was one of the ones that came in there. She was much better than I ever was as an agent. So I'm glad that,
And then you got hitched to her.
I got hitched to her. So yeah, everything has been great, but, the real estate market always seems to be a little bit interesting, and, surprisingly, about 5 to 6 years ago, we were in what was called a really soft market. So there was a lot of insurance companies. Premiums were going down year over year. Citizens wasn't that heavily populated, but very quickly things changed. And I guess we're definitely going to talk about that a little bit later. In the beginning, though, you mentioned Hurricane Idalia. So before we get off of that subject or go too far down the road, that thankfully missed us again. I don't know what we have in the Tampa Bay area that keeps protecting us, but it is not going to be pretty. The Indian burial mounds,
Yes.
That's right. So we skirted Idalia again, but there was a substantial amount of flooding because of the water that was pushed into our bay, and the lowest lying areas, Shore Acres being one of them, saw again some pretty substantial flooding. Now, most of those people have flood policies, and so they are going to have protection. The one thing that the flood policy does not afford that a homeowner's policy affords is loss of use coverage. So when these people have to leave their homes, they're going to have to come out of pocket to find living arrangements elsewhere, which if there was a hurricane that hit, you're going to have wind typically and flooding, which your home policy will cover loss of use. But there are a lot of things that are going on in Shore Acres right now that are hurting some of those people that have those flood policies. But sadly, in those areas, the NFIP is the only policy they're really going to be able to get. And so, hopefully things will get taken care of pretty quickly in that area. But there are a number of coverages in the policy that are very important. The flood doesn't really have many of those at all.
Okay. And let's break it down too for people that just know that the home buying or selling process, their lender tells them, hey, you need insurance, right? What do they even need to know about the basics, right? So if you're financing a home, somebody is giving you money for you to purchase that house. And they want to say, if I'm giving you this money, I want to make sure that if something happens to it, right, that it's insured, that my money isn't just going to go away, right? Like tornado comes, just picks it up off the ground. Now
Right.
that bank or that financial institution is out of that money that you were supposed to pay back for the next 30 years, right? So when they say we need property insurance, we need flood insurance, of course, in Florida, it's based off of zones, which have changed recently, right? So if you're in a flood zone, obviously you need flood insurance. Is it advised if you're not in a flood zone, should you still get flood insurance?
So technically everybody's in a flood zone.
True.
So
True.
it's just whether or not you're within the 1 in 100 year
Okay.
floodplain. And a lender is only going to require flood insurance if you're in A or V zones.
Yep. Okay.
There was a statistic, I haven't seen the latest update, but 60% of all flood losses occur outside of your high risk flood zones. So
Whoa, dropping knowledge.
I know. So those people that don't think they're in a flood zone, because we hear about it all the time, we inform them and try to educate them that they are in a flood zone. It's just the likelihood of them flooding is a lot less than somebody that lives in Treasure Island.
Right.
But that being said, the one thing that we're constantly having to overcome on the insurance side is when we're selling a policy, nobody ever thinks they're going to have to file a claim. So,
Just a thing you have to do.
right. People want the cheapest coverage that's out there. Obviously, interest rates are higher, home prices are higher. And the one thing that somebody can really change on the new home purchase or property purchase is insurance. So at the time of a closing, we try to educate as much as possible, but a lot of people want to go with whether it's a higher deductible. And that's just, a lot of people don't even understand this at the time of a claim, but your deductible is your responsibility for the claim. So if you're talking about a water leak or a water loss, deductibles are anywhere from $1,000 to $2,500. So that's what you have to come out of pocket, and the insurance company
Until
covers
the
rest.
insurance company starts paying. Yeah.
Up to the policy limits. And then you have hurricane deductibles, which those take into consideration an actual hurricane that comes and does damage to your property, and that's a percentage deductible. So if the value of your home is $200,000 your most typical deductible is 2%, you've got to come out of pocket $4,000, and then the insurance company picks up the rest up to the policy limits. So you have home insurance and you have flood insurance. They're two separate things. And if you're in a high risk area, you do have to purchase both of them. Flood is rising water from the outside in, and your home is really going to cover anything else that happens to your home that really isn't anything that is like intentional fire, or insurance policy also doesn't cover wear and tear. So anything that is a sudden loss is going to be covered. So you're talking, the most prevalent claim is water damage. So that's a pipe that's bursting, breaking, leaking,
not from
seeping.
Flooding or a storm.
Correct.
Okay.
Yeah. The most common insurance claim is water. So that's what, especially in this state as well, they want to make sure that all of your plumbing and everything is good. I don't want to go too far down in the weeds with underwriting. But
Stop
yeah,
me now.
Yeah. Don't let me nerd out over here on insurance.
Okay.
But I mean, at the end of the day, the insurance policies that the state of Florida authorizes insurance companies to sell are almost all identical. There's very, very few nuances in the policy. So if you're being underwritten by an admitted carrier in the state of Florida, you're going to have a lot of very standard coverages, which people need, that will protect them at the time of a loss.
Okay. And in addition to the education that you provide, other insurance companies provide, I also was doing some research and I wanted to bring light to this resource. And I'm curious if this is something that you direct clients or people to, but I just found out about it. So it's actually III.org, triple I. But what this is the Insurance Information Institute, and they're a US-based association which exists solely to, what they have in their website is, quote, improve public understanding of insurance, what it does and how it works. And they're quoted in the media quite a bit as a credible, unbiased, reputable source. I have never heard of them, ironically enough. But is this a resource that you direct people to? Is it something that, you know, you and your company, your colleagues look to frequently, or, you know, just like realtors, we look to, you know, realtors.org or the MLS or, you know, different associations that we have?
Yeah, I'm not too familiar. I've heard of that one. I'm not too familiar with it. As far as routing clients that want to really delve deep down into like insurance knowledge or policy or what it's supposed to do, most of the times that's where we build the relationship.
Right.
So we have a conversation with them to let them know, because surprisingly, most people just forget everything that you tell them anyway. So it's just our job to make sure that they're protected. And then just to notify them, you know, we want to be quick to help them out when we know that something is potentially happening. A good example is a hurricane is coming. It's very important, and we blast all of our clients with emails and our social media, letting them know what to do at the time of a claim when a storm or a catastrophic event is happening. So we post all of the insurance companies' claim numbers. We post, we're on the phone all the time, issuing, letting people know what their policies are, their policy numbers, and then what to do in the event of a claim. Because really at that time, everybody's pretty much freaking out because they don't really know what to do, and they're trying to make sense of what's going on, and they want everything to be taken care of very, very quickly. So we're more or less providing our clients a promise to help them throughout these times. And that's kind of what we do when we're selling a policy. Again, most people don't think that they're ever going to use their insurance policy, so they don't pay attention to what we have to say, but they really do listen to us when there's a catastrophic event that's coming. So that's kind of where we earn our money, is when that's happening. So we really want to help a client out at that point, because any other time, like those insurance, you know, very, very, very few people will want to sit down and learn what their insurance policy, or figure out, you know, what their policy means. But you know, what we tell people to just kind of like calm them down, again, in the state of Florida, is the state regulates everything. So if an insurance company is approved by the state of Florida, they have to jump through so many hurdles, and they're so heavily regulated that the policy is going to provide them coverage eventually, hopefully sooner rather than later. But the state is going to make sure that the insurance company does what it's supposed to do in a loss.
You mentioned that earlier, that some of these insurance companies are mainly small. There was just one, have you heard of Mainsail, that just came into the market? So there's like some big dogs out there that we all know about. What is the difference that you see going with somebody that's been around, right? Is it financial stability as opposed to like a newer insurance company that's small? Like Mainsail is out of Tarpon, I think, right?
Right. So what you're going to see, because we'll probably talk about this a little bit later, but there was legislation that was passed that made it more favorable for insurance companies to want to come into the market versus leave the market.
Was this the 2A bill that we talked
Senate,
about?
Yep,
Okay.
Senate 2A and 2D. So that's one caveat. The other is reinsurance, which we'll also talk. That's why insurance rates are so high. We had a lot of fraud that was going on in our industry, and then reinsurance rates went up quite a bit. So insurance premiums skyrocketed. And Citizens, which is our state-run insurance company, became the largest insurance company in the state, which they do not want to be. So they have a lot of very good business within the state. So what's going to happen over the next couple of years is you're going to see quite a few companies come into the market, but what they're going to do is they're just going to start taking policies out of Citizens. So where we write business, you have a client that is under contract on a property, you're going to contact Heather. Heather's going to provide you with quotes with carriers that are actively writing business. We're already technically appointed with companies right now that are insuring homes in the state of Florida, but we can't write a policy with them. They're just taking policies out from Citizens. And they're going to pay a claim if something happens to that policy, but we can't write with them now. Loggerhead is one of those companies, but as they get bigger, they'll probably get to a point where you can start writing business. So you have Tailrow, Mainsail, Loggerhead. Nobody's ever heard of these companies. They're not the State Farm, all states that you typically hear. Those that we call those captives, they don't really want to write in this because Florida's just crazy.
What define writing? Like how a client would understand that.
So,
and maybe it might help to, so Florida Strategic, when I go to them, I say, hey, my client is getting to the point where they're going to need insurance, and to make a decision, you guys work with 40 plus insurance companies that are still writing policies, right, for clients, or is that not the lingo?
No. That
Tell
is
me the lingo.
So we're appointed with a lot of companies.
Okay.
Because there's been so much turbulence in our market, probably the best word to use for that.
That's a good word,
They've
yeah.
slowed down on writing any new business. So
Okay.
to be able to qualify with some of the insurance companies, it's almost impossible.
Oh, right. And we're in hurricane season, so trying to get a policy anyway, people have stopped.
No,
Do you see that?
if there's a storm that comes close or that looks like it's going to come and hit Florida, they'll restrict binding. So you can't. It's like somebody that, we'll say an investor owns like 20 properties in Florida, and they've never carried insurance on it, but all of a sudden one day before a Category 5 is
They're
about
like,
to hit,
give
they're
me
like,
insurance.
yeah,
now,
technically at
I'll
that
pay
point,
anything.
that's not really insurance. That's just
Yeah.
passing the buck. So they close off binding so that it's not technically
It's
insurance.
just securing your policy, right?
So if you, even if you have a home that's under contract and somebody's looking to close this Friday the 15th, and there's a storm that's coming, we'll bind the policy today to make sure that it's effective on the 15th so that there's no issue. We won't wait till the 15th to bind the policy, because if there is a storm that closes the market, then that person can't close because technically they don't have insurance on their house.
Right.
So when you're talking about an insurance company writing business, we actively write as an agency. So you can consider us to be like a broker. We're signed up with a lot of different insurance companies around the state. And when we get an opportunity to quote a property, we're going to find the best option for that property and that risk and present it to your clients. And hopefully we can help them out. The insurance company is just, they want as much risk as they can take based upon how they've structured their business. But these companies that are coming into the state of Florida right now, the easiest path to entry for them to get a lot of policies is just to take them from Citizens. So Citizens has hundreds of thousands of policies that they don't want to write. So these insurance companies, if you're going to come in, even if we're writing 1,000 policies a month as an agency, they can just go straight to Citizens and they'll say like, I want 25,000 policies. And so then they go through, and that's how insurance companies kind of start, at least in Florida. That was kind of like the last time that happened. That's how Heritage and Homeowners Choice got started as companies. And now they're companies that are actively writing business, where they were initially just takeout carriers. So that's what you're going to see first for these smaller carriers.
So it's like two insurance companies trading and just being like, hey, I don't want these 25,000 policies,
right?
Or these clients, right? Essentially these clients, I'm going to give them to you and you can fund them, or.
Well, yeah. So you have to think Citizens is the state-run insurance company. They don't have to adhere to the same guidelines that a private insurance carrier has to adhere to. A private insurance company has to buy insurance. It's called reinsurance. So let's say that Hurricane Idalia is coming and the insurance company has $100 million worth of exposure. Well, they don't have $100 million on hand to pay for claims if they have a total loss. So they do what's called buying reinsurance that covers them for $100 million. And then their deductible is, let's say, $5 million or $10 million. Wow. Yeah. So the insurance companies have to buy insurance. And then it's crazy. You know, it's just like, you can go down a really
America.
Now, Citizens, which is the state-run insurance company, doesn't have to adhere to the same rules as a private insurance carrier. So they don't have to carry the same amount.
Because they're the big dog?
No, because they're a government agency. So what they can do is they can assess every policyholder if there's a loss that it goes over and above what they have in the form of their reserves. So that's where there's an assessment that they can assess people, they say up to 45% of your insurance premium. So if you're paying $1,000, they can assess you another $450 if they run out of money.
Premium is the annual total that you have to pay for insurance. It's not necessarily.
Correct.
Okay.
Yeah. And then the assessment is just, no other private carrier can just assess you if they don't make money, but Citizens can if they don't adequately have the amount of money to pay for claims. So the state of Florida could look really bad, and our elected officials could look bad if they're holding the bag with all of these insurance policies and we have a huge storm that happens, and all of a sudden Citizens starts sending out these assessments like, hey, we need money from you. And so
in order to cover a possible loss from.
No. This is after the loss has occurred. So Citizens does have billions of dollars to pay for claims, but they also have tens of billions of dollars of exposure. So they don't have all of the money to pay if something were to happen. But where Citizens is right now, their rates are artificially low. That means the private market can't compete with them because it costs the private market more money to just stay in business than it does for Citizens to write a policy. So that's why the private market kind of stopped writing business, which a lot of people think that the private market's just pulling out of the state of Florida. But if I was to tell you, hey, Lindsay, I want you to give me $100 and I'm only going to make $50 off of that, or I'm going to lose $50 on the $150 because it cost me $150 to stay in business. Why would I even want to get $100 from you if it cost me $150 for you to give me?
So you're saying that what they do is after Idalia comes and say I have a property, there's something happened. Like say a pipe broke, right? Because we're talking about property insurance, right?
Well, Idalia, like we're talking about the catastrophic loss now. So we're talking hurricanes. So
okay.
Let's
So
say
if something happened to my property and I'm like, hey, this happened, I need money to fix it, right? Like based on my premium, based on what's my coverage limit, based on everything, right? Like how can you help me? You come back to me as Citizens and say, well, in order to help you, I need what, like $100, $200 extra dollars, just for example's sake?
So they never make it easy. So they can assess
We definitely have heard that in the media, especially after the last hurricane. Where was it? In South by like Sanibel, or a little bit closer, where it really hit the South.
Are you talking about
Florida?
Ian?
Yeah.
Yeah, Hurricane Ian.
Yes, where people still have tarps over their homes if you go down there because, like you said earlier, insurance companies are kind of pushing to close it quickly, right? Like, okay, you only need this much money, and then people realize they actually need more, right? Like the insurance companies want to close these claims as quick as possible. You're saying in this case, sometimes what can happen is that assessment comes.
So what would happen in this time is the citizens would pay a claim. So they, whatever the amount is of the loss, they would pay it. What they just have the ability to do, where 10 companies in the last 2 years have gone out of business because they've ran out of money. So once the insurance company runs out of money, the state steps in, because you're paying for the Florida Guarantee Fund. The state steps in and helps pay those claims.
Got it.
So Citizens is not going to go out of business because they can't run out of money because they have us to pick up the bill. So if they have to pay extra amounts of money, at the end of the day, they'll pay the claim. They're just going to come back to us, and they can do several rounds to get to recoup the money that they lost.
Okay.
And we explain that to the clients. But let's say, here's a good example. So we're selling a policy to one of your clients on the private market, and the policy premium that's outside of Citizens is $1,000 a year. Private company A is $2,000 a year. Well, somebody's going to say, like, I'm never going to file a claim, so I want to save $1,000. I want to go with Citizens. And we're like, okay, it meets the guideline. They're more than 20%, and that's the best option. So we'll write you as Citizens. Citizens has the ability to assess, let's say, up to 45% of your policy premium. So let's say they run out of money. We have a Hurricane Andrew and Irma hit the state of Florida the same year and completely wipes out most of Florida. Citizens doesn't have enough money to cover all of their exposure. So once they fix that, once they get loans, however that works, that $1,000 policy, they're going to pay your claim, but then they're going to come back and they're going to say, hey, Lindsay, you now owe us $450 because we're going to have to assess you that 45%. And we tell everybody that, but a lot of people don't really realize that. But then again, at the end of the day, even if we assess you 45%, so $450, still $550 less expensive than the private market.
Right.
So we're just hopeful that since the legislation has been passed and hopefully we don't have any storms, reinsurance rates go down, these private markets are going to become very competitive to Citizens. So that's kind of what we're hoping that's what I think is going to happen over the next 18 months.
So interesting. And I'm so glad you gave that analogy because it's very enlightening on how this whole system works, right? Because it is a system at the end of the day. Businesses are protecting themselves as well, just the way that it goes. Someone did have a question. I put a little question box on my Instagram feed the other day. And so some questions came through. And one of them was how, someone who comes to you for insurance, they're going to rely on you to vet these different companies. But is there any sort of fail safe that prevents these companies from taking a client's money for insurance? And if they do go bankrupt, they just don't have money. What about that premium that was paid for the rest of the year? How can they give that money back when they ran out of money? Is there anything that protects the client's
Yes.
money?
So again, it would be hard for me to believe that there's another industry in the state of Florida that's as regulated as the insurance industry.
Okay.
So the insurance companies that we write with as an agency are, for the most part, admitted. It means that the state of Florida has given these companies the blessing and are protecting them at the time of a loss.
Okay.
So the state of Florida has a guarantee fund that every insurance company pays a very small portion into, that if for whatever reason any company goes insolvent during a contract period, the state of Florida will step in and pay a claim. Now, there are limitations on the claim, like they'll pay a claim upwards of $500,000 for the actual dwelling, and there's other sublimits, but it's not really important. But the state of Florida is stepping in to help out these people. I mean, and it should make people sleep a little bit easier at night to know that they're not really going to get taken advantage of. It might make the claim a little bit more difficult in the end, but the state, as long as you're dealing with an admitted carrier, is going to provide that coverage. Now, there are what's called excess and surplus lines carriers, which a lot of the high value homes that Citizens won't write. Citizens won't write coverage for any home that's $700,000 or more in value. So you've got to find options for those clients above and beyond that, which is pretty difficult at this point. But there's very, very few admitted market options. They're very expensive, even if they're willing to write it. But if not, you have to go what's called the excess and surplus lines company. Now, these companies are not backed by the state of Florida. So for whatever reason, they go insolvent. There's not really that much that you can do. But there are, I'll give you an example. I'm sure you've heard of this company. They have thousands of syndicates. They're the oldest insurance company in the world, Lloyd's of London. Mm-hmm. Lloyd's of London is an excess and surplus lines carrier. They are not backed by the state of Florida or the guarantee fund, but they have a lot more financial power. They have so much more financial power than even the state of Florida has. So when you're writing a policy with them, you know, they have not basically gone bankrupt where they can't write a policy.
Many questions.
Yeah. So and they're also rated by agencies like AM Best. So you know, when we work with brokers as an agency that goes to the excess and surplus lines market, and they vet all of these companies to make sure that they're financially stable enough to be able to pay for any of the exposure that they have in Florida.
Okay, now what about being self-insured? What does this mean? And is it part of that second, like the plan B that we're talking about? Or is this like a plan C? Being self-insured
is just,
what
you're taking the risk.
Yeah.
So all insurance
self-insured literally just means that you're not going to get in a policy, and if something happens, you pay for it.
Yeah.
It's literally it.
Mm-hmm. Yeah. I mean, that's...
Are you seeing that happen often?
It's mainly investors
for these
will do that.
$700,000 and above properties.
Not as much as you'd think. A lot of them are insuring the property. What we've seen with some of the clients as well is if somebody's not going to insure the property, they're at least going to insure liability. So that's just if somebody hurts themselves on their property, that's a very, very inexpensive coverage. Like you can buy $1 million worth of coverage for $200 to $300 in a lot of situations. So even if they're not going to insure the home, let's say that you have a home that's a brand new poured concrete structure that's, you know, concrete floors and
concrete box.
Yeah, basically, but it's got good finishes, but it's got hurricane protection. It's got all these different features that are built into the home, and it's $1 million rebuild for this home. Guy gets a quote for an insurance policy, and we've seen some of them that are like this, and it's like, your policy's $75,000 for the year. And the person's like, 75 grand a year for this? Like, I'm not going to have the likelihood of me having a loss that's over that is crazy. And I'm just gonna be paying 75 grand. If I pay that policy for 10 years, that's $750,000. That's crazy. I'll just put that money in the bank. And, you know, if you don't have a loan on your home, you can do that. You can start thinking of all these options. Where a lot of people are stuck is that when they have a lender that's involved with it, they have to purchase insurance on their property.
Right.
And if they don't keep insurance on their property, the lender's going to force place coverage on them. And that coverage really isn't good and really doesn't benefit.
That's PMI or what? What's that?
No.
called?
So, the PMI is just mortgage insurance. If you default on a loan because you didn't have enough equity that was put into the property, the force placed insurance is the lender is going to make sure that they insure. They want to make sure that they don't have a loss on an asset that they purchased.
Right.
So they're only going to cover the property itself. They're not going to, if there was a hurricane that came through and it was devastating like Fort Myers and Hurricane Ian, and you're not able to live in your home anymore, you have a loss of use coverage in your policy. So say you have a $400,000 coverage A amount in your policy, you have $40,000 to find living arrangements while your property is being fixed. If you have force place coverage, you don't have any of that insurance.
I'm sure most people truly don't even know what they have.
Right.
In
no,
their
they don't.
Insurance. Yeah. So what if they wanted to come to you and like, would you talk through it with them?
Mm-hmm. I mean, happy to. Just, you know, a lot of people.
If you say you're not on the podcast. Be
careful what you wish for. No, as far as just.
He'll take your 2.5 hours of your time.
Yeah, that's right. Yeah, how much time do you have?
Okay, good to know.
Yeah, so.
That's something you guys definitely want to look for. Obviously, we're in hurricane season. So if you have an item within your policy that gives you the capability to be put up somewhere, right? If you can't stay in your home. I mean, you go throughout the neighborhoods, and I didn't want to just say only Shore Acres suffered from flooding. Clearwater, North Beach did. There's so many different places around Pinellas County and Tampa Bay in the state of Florida that have issues going on. But check out your policies. It's critical. You're paying for it.
The big thing is make sure they're active. Make sure your policies are active, because that's where force-placed insurance will automatically kick in if your policy's lapsed. It's just not going to really provide... it'll provide a benefit to the actual structure of your home, but there are a lot of things that most people don't even think about when a loss actually occurs that
Right.
insurance can help you out with. So that's kind of where it is built into the policy. All the admitted policies have it built in there. Almost every single excess and surplus lines policy has that in there as well. And that's just one of the coverages, but it's one of the most important that a lot of people in Shore Acres thought they had with their flood policy, but didn't.
Yeah. And let's talk about the fraud situation here, because doing my research, I was blown away. I think a lot of people have the idea that insurance companies were pulling out because, like, in California, wildfires, or here, hurricanes, right? And these massive storms, but it's actually the claims and some of the litigation that is making these insurance companies pull out. So talk to us about some things that you've heard about, some things that you've seen when it comes to the fraud side.
Yeah. I mean, and it's not that they're pulling out of the state, they're just going bankrupt. Yeah. They're going out of business. So
Y'all and your fraudulent claims.
yeah. So everybody that got a brand new free roof probably was a
Right.
part of that, whether or not they implicitly knew that that was what was going on. I mean, that's
What are we talking about?
so somebody comes by your door and just knocks on your door. And this happened over the last few years. And they just said, hey, we just replaced your neighbor's roof and it cost them little to no money out of pocket. And we see that your roof's a little bit older. It's probably got storm damage. We can get you a brand new free roof as well. All you have to do is sign this contract.
Stop. That's fraud.
That itself, yeah, that itself is not technically fraud. Maybe they do have storm damage, but technically when you have storm damage, you're going to find out about it when the damage occurs. Very unlikely that it's going to be months or years later
Right.
that all of a sudden some roofing contracting company
Just
or public
swings
adjuster
on by. Let me give you a free
finds
roof.
it. I mean, yeah, and it was getting pretty bad because we even saw one of our insureds took a video of a guy on his roof with a weed whacker, like getting the shingles.
Weed whacking the roof, the shingles?
Yeah, just getting getting some granular loss, getting some broken shingles and whatnot, so that he could get a free roof. So, that is an extreme case. But what happened in the state of Florida was contractors, public adjusters, and attorneys. Not all of them. A very, very few select group of these very non-upstanding individuals and companies found a loophole in an insurance contract to turn it into a home warranty. And what they would do is they would go, and if somebody's going to offer you a free roof and you've got an older roof, would you want to come
yeah.
out of pocket $20,000 or would you want to just come out of pocket $2,500? And even in some cases, they were saying you don't have to come out of pocket at all. We're going to, if you let us put a sign in your yard, we'll basically call that advertising and we'll take that $2,500 off of your roof. So then they got a brand new roof, no money out of pocket. So, there are a lot of people that are just like, sign me up.
And then they got the whole neighborhood.
Yeah, and you can justify anything. I've been paying insurance my whole life and it's never really paid for anything.
Yeah.
And so what happened on the back end, what they don't really know is there was something called assignment of benefits. And so these fraudulent contractors that had partners with public adjusters and attorneys, they would then immediately get the contract signed and then hand it over to the law firm, and the law firm would file a lawsuit against the insurance company.
No.
So one of the insurance companies that's actually still in business, they said in 2022, they averaged 26 lawsuits a day. So if you just think about that, they're not the biggest insurance company. They're a medium, decent sized insurance company, but they averaged 26 lawsuits a day. And almost all of it was the roof fraud. I think that I've heard advertised, we have the largest attorney's office in the country in Florida. Weird how that happens.
So strange.
Yeah, it is really strange how that happens. And it's probably going to happen where a lot of these attorneys firms are going to lose or lay off quite a few of their people just because of what happened with the legislative changes. So
there's other ways to get a new roof.
Right. Well, and right now it's pretty impossible to go that previous route. So that a lot of that fraud, it just inflated the cost of the claim. The attorney's fees were paid by the insurance company, and they had a fee multiplier that would be assessed by a judge or whomever was ruling on the case. So let's say that an attorney charged $100 an hour. It was looked upon in the past that attorneys really didn't want to work on insurance cases.
Right.
So there was a law that was put in that an attorney could charge a fee multiplier. So that $100 an hour, they could charge 2 times that. So they could charge $200 an hour, $300 an hour to represent this case. And so, a $10,000 roof was costing insurance companies
3 times.
over $100,000.
Oh God.
So then multiply that by 26 a day, multiply that by, we had 10 insurance companies going out of business. All the while
that
reinsurance
broke.
Yeah. Well, then you think reinsurance costs went up on average 60% last year, 70% this year. So insurance companies just, their margins are pretty tight. They have to come out of pocket to pay claims. So claims can be anywhere from a strongly ran insurance company from like 20 to 30%. So 20 to 30% of the money that they take in.
All of their business, 20 or 30% are putting in claims.
20 to 30% of the money they take in your premium, let's say, is allocated to claims.
Got it.
But then they have to run a business. So they have to have infrastructure, employees, they pay insurance agents commission like us to sell the policy. And then they also have to buy reinsurance, and reinsurance is costing 40 to 60% more, of the dollar that they bring in as well. So if they're paying out 40 cents for a dollar on the claims, then they're paying 60 cents on the dollar for reinsurance. Well, now they have no money. So now they still have to pay for infrastructure. They still have to pay for all these different things. And that's just kind of what happened in Florida, which is why a lot of these carriers went out of business.
I'm going to start a Real in Insurance podcast.
Yeah.
The Real. So this stigma, and this is where we'll kind of wrap up, but like this stigma about insurance companies, right? Like everyone has a stigma about something until they need it, right? Like, I've been paying for insurance, health insurance, whatever it is, right? For years and years and years and never have had to use it. And then the one time you do need to use it, where does this stigma come from? Is it lack of knowledge? Is it like what action can you take in your industry? Like I'm trying to take in mine to like provide people the knowledge, even if they don't want to hear it, right? Like we're going to send this podcast out. People are going to listen to it, but how have you tried to reduce the stigma of insurance in general?
Conversations like this are the best avenue, where you have kind of a long form to have a conversation about it. But really at the end of the day, it makes sense that they have a bad stigma. I mean, they're providing basically help for you that you may not ever need. So you're literally paying somebody for air and paper.
Yeah.
That's what most people think insurance is. And then when you actually have a claim, it sucks. Nobody wants a claim. Like something's happened that's put you out, and it never really happens at the most opportune times.
Right.
It's going to happen at an unopportune time. So, at that point, you have to get an adjuster involved that has to come out there. That might not happen for a few days. So, now all of a sudden you're thinking about do they even care about me? Like what's going on? So the thing that we try to help people when we explain things to them about their policy, it's just try to be as proactive as possible. Know that things do happen. Make sure that you do have money if you need to stay somewhere else. The insurance company will reimburse you. But if you're living, which sadly a lot of people are, and you don't have any extra money, and all of a sudden you can't be in your house, but you don't have your credit cards maxed out and you can't go to a hotel, now you're stuck. And now the insurance company is terrible because why didn't they just pay everything right away? And, there's steps and procedures that everybody has to go through, and eventually things will get taken care of. But the insurance company's not going to look, phenomenal. In some instances they do. Like you'll see companies that come in and they have disaster relief where they'll provide as much stuff as they can, but they can't be specific a lot of times to people. So, there's a lot of things that happen as far as all the stuff that happens within a claim. And, it's just more frustrating than anything else. So the insurance companies are trying, and not every attorney is bad that's in that lawsuit that helped out people. There are mistakes that insurance companies make, and not every insurance company is always acting in the best, in the light. So, we try to do what we can to always help our clients, and we've been able to do that. And, hopefully we can just continue to do that for a while.
You definitely have been. All right. This is kind of a creative question. I would just want to know where your brain's at, but this is where I kind of think on the innovative side. Last question. So hopefully it's a good one. But as we kind of continue down this journey in America and where we're going with innovation in general, we're seeing this, and it might be a terrible comparison, but in the healthcare industry where, you know, we've had insurance for so long and we don't use it till we have a problem. Well, let's think of health insurance now as more preventative. What can we do to actually prevent these issues from happening, right? Health-wise. On the property insurance side, do you see the industry changing at all? Kind of like healthcare is shifting a little bit. Is there anything that would make insurance better, right? Like maybe more financially stable?
Yeah, I mean,
anything. Let me know your thoughts.
Absolutely. So technology helps with everything. So some insurance companies are trying to be proactive. So they have water detection devices. Water is the most prevalent claim. They have water detection devices that you can put underneath your hot water heater, underneath your washer, underneath your dishwasher, and that will immediately notify you via an app or a loud siren or whatnot that there's water that's leaking. So that's going to immediately stop a claim. There's even some of these devices that can get hooked on as long as you put it to your water main as well, that will shut off your water main if that device is, is like triggered.
Okay.
So, I mean, that's definitely, again, I said water is the most prevalent claim. Building codes are very strict, especially in Florida. You're not seeing a lot of newer homes get nearly as much damage as the older homes. And we talk about shore acres and flooding. Those homes are built, let's see, I think the current base flood elevation height in shore acres is 9 feet. The city of St. Petersburg will not issue a new certificate of occupancy or a permit if the living floor is not 11 feet in these areas. So even though it's 9 feet for the base flood elevation height, the city is not allowing anything to be built where there's a living floor lower than 11 feet. Well, if you bought a home that was built in the 50s that's at 3 feet, there's not really much that can be done at that point. You know, that the end of the day, the best thing that you'd be able to do is knock your house down or make the bottom floor non-living space and build up. But that's a pretty expensive solution. So there are some things that are changing the industry to make it better. But a lot of it is just like being knowledgeable. We live in Florida. We're surrounded by water. We have catastrophic events. There are things you can do to protect your roof or your house. Yeah. So being proactive versus reactive is definitely the best. Right.
To prevent the damage that could have been, been caused.
Yeah.
I like the sensors. That's pretty cool.
Yeah. There are insurance companies that we write with that will literally give them.
Provide.
Yeah. They'll give them, because for them, let's say it cost them $150. Well, a water damage claim is at least going to cost them $10,000,
right?
If not more. So if you do the math and you say, I'm going to have X amount of water claims, shoot.
Or it could have been, leaking for 5 hours, and then you have more damage if it's
mold,
2-story or whatever it is.
There's always something.
Gosh, so enlightening, Michael. Yeah. Thank you so much for coming by. Like I said, I love using you guys. You've been nothing but incredible so far. So we'll put the contact information below. They can contact you or Heather.
Yes.
Yeah.
Yeah. Well, happy to help in any way we can.
Yeah. You want to give them a little insight how they can reach out to you?
Sure.
Phone, email, website.
So I'm actually going to give you Heather's contact information, because one of the reasons why she's not here today is because she is so busy that she wants to make sure that she's very attentive to all the needs of the people that she works with. So her email address is heatherp@flstrategic.com, and her phone number is 813-777-2728. She has Peter Vosti and DeWald Gals, which are her counterparts that work with her. And all they're trying to do is exceed the expectation they set with you. So they're looking forward to continuing to help.
Oh, good. Thank you so much.
You're welcome.
Thank you.
Yeah.
Bye.